Again, Edward has got the number. We're seeing it here as well. Edward, go ahead.
Yeah, Cheryl, the economy added back 916,000 jobs. The unemployment rate, as expected, went to 6%. If you look inside some of these numbers here, you can see that employment in transportation and warehousing added 48,000 jobs. Manufacturing employment rose 53,000 jobs. Employment in professional and businesses services rose 66,000. Construction added 110,000 jobs in March. The unemployment rate, or talking about the unemployment in other services like social assistance, added 25,000 jobs. Wholesale trade increased 24,000 jobs. Retail trade added 23,000 jobs. Employment in mining rose 21,000 jobs. So again, overall, a big boost to this report. 916,000 jobs added back to the economy here. The unemployment rate down to 6%. I'm going to go inside some of these numbers and get some more for you, Cheryl.
And I want to bring it back in, Joni Courtney, because the March labor force participation rate, Joni, 61.5%.
Yeah, and Cheryl, this is still, almost a 50-year low. We were already challenged with labor participation before the pandemic ever occurred. This was something we talked about. We were having a struggle getting people back to work. We were having a struggle getting women back to work. And unfortunately, the pandemic set us so far back. And now with the stimulus money, it is not incentivizing people to come back to work. So that labor participation is truly an issue. And I think that employers will be forced to have to pay more. They need the talent, just as James Freeman was talking about small businesses. They are struggling to get people back to work. They have the jobs, they have the work. We're trying to get our economy back on track, but we have a problem, a big challenge in the United States with getting people to participate in the workforce.
I do want to bring
and I don't see that we can get that stimulus.
Joni, I'm sorry.
Really kind of close the door on that.
I didn't mean to talk over you. I do want to point our attention to, reminder to everybody, the markets are closed. The markets are closed, but we did see a jump in Dow futures when this number crossed, and Edward brought those numbers to us. Again, you're seeing the Dow up 113 right now, the NASDAQ up 60, and the S&P up 18. The bond markets are open for a half day today. You could see a reaction in the bond markets, but I do want to point out that we did see a jump, James Freeman, in Dow futures as well. And I'm also looking at revisions that are just crossing here. They did do a revision for February to 468,000, and then they also revised January to 233,000. So those revisions are something that we look at as well.
Yeah, and in any month, 900,000 plus jobs added is fantastic. So let's hope that continues. Yes, let's hope the labor force participation gets back into that pre-COVID range, 63.5% roughly. That's where we'd like to be. I think the one huge stimulus would be the federal government saying no more aid money to schools who don't reopen for in-class instruction, because that's an easy way to get lots of people back into the labor force.
Yeah, and Eric, I want to bring you into this, and this is a stock play. Leisure and hospitality jobs, 280,000. And one of the things that we expected to see, and maybe this is not as much as you estimated, but as the reopenings continue across the country, we're expecting to see leisure, hospitality, services jobs jump because those places are open, whether it's hotels or it's restaurants or it's theme parks, you name it. We should have seen a bump in that, and we did get one of 280,000.
Sure, it's really solid confirmation that this is a broad-based recovery, and we think it's just getting started. We've been talking about two horizons for our clients, Horizon 1 being this reopening activity as we get closer to increased vaccinations, more mobility, and then Horizon 2 would be once we have reached herd immunity and we get back to more of a status quo, if you will. So in that Horizon 1, we've really been emphasizing mid-cap, small-cap stocks. We've been emphasizing more of the cyclical energy, financial type of orientation in portfolios. We think that's going to continue to work. When we get back to the second horizon, though, that's the more steady state, if you will. That's where we see productivity challenges That's where we see more of the demographic challenges in Europe and in Japan, for example, still giving us a bias towards the U.S., but also giving us a bias towards technology and healthcare. There has been some relative weakness in technology and healthcare. We'd actually be using this as an opportunity to bolster those positions, thinking about Horizon 2, which is just around the corner.
Yeah, and I think that's what's going to be interesting to see, in particular, is how these stocks perform. Again, the markets are closed today for Good Friday, but I'm curious how this group is going to perform, even the transports in general. I was looking too, I was breaking down into this, John Hilsenrath, into the service side of this and the leisure and hospitality side. Food services, drinking places, 176,000 jobs. That was a big chunk of it, to be honest here. And then you also saw arts, entertainment, recreation, 64,000, and then accommodation, that's hotels, 40,000. We're also seeing, I want to look at something else here right now. Yeah, the U6 underemployment rate, 10.7%. That is actually a little bit less, John Hilsenrath, than the February number of 11.1%. And that's the underemployment rate. That U6, again, is what the Fed looks at, John. So I wanted to get you to react to that.
Yeah. A couple of things. In terms of jobs and where they are, I think there's going to be a boom in the restaurant industry this summer. I think there's going to be tons of jobs there. A lot of people who want to get out and spend time with friends and family. So I'm expecting a lot in that arena. In terms of the Fed, I think that 95% of the human population would say this is great news. The unemployment rate is falling. There's more jobs. I think if you're a financial market professional, it's a little more confusing because you have to start asking, well, is this going to provoke the Fed to stop its bond buying program a little bit sooner than expected? Jay Powell, the Fed chairman, has been kind of pushing that debate off. He doesn't want the market to get ahead of itself. But this summer, when we're all out at restaurants having a nice meal with friends and family, I think there's going to be a debate in the financial markets about the Fed pulling back on some of these policies a little bit sooner than expected, and that could affect the trajectory of the stock market rise. But for the economy, it's off to the races. I just want to say one other thing.
Sure.
This is all good news. Risks. What are the risks out there? I mentioned the Fed. That's one. The other one I think we have to mention is what if COVID comes back? We're hoping and expecting it not to, but look at a place like Brazil right now, which is just in a horrible human tragedy. That, I think, is the big risk out there, is if some variant comes out and we're back in the soup later this year.
Yeah, and I also, too, the other thing that I wonder about is long-term unemployment. And, Steve, I'm going to take that to you because as we're going into this number, if you look at the last, it's basically about 4 million people now that are still sitting on that long-term unemployment. And that, to me, that's the continuing number that we bring to our viewers every Thursday, the continuing claims. If we don't see a drop in that, and to the point we made earlier about the fact that a lot of folks are sitting at home making more money than if they go back to their jobs. So why not stay on unemployment if you can, not work? If that long-term unemployment number doesn't start to come down, I've seen estimates as many as 10 million people are still collecting. That's a problem for the economy. That hurts growth.
It sure does. And it's also a problem for those workers. The longer you stay unemployed, the more you lose your job skills and you kind of calcify. And that's a very negative thing. We got to get people back into the workforce. We should be really encouraging work much more than welfare, which is what the last bill did. Look, John Hilsenrath anticipated I would say this, but I'm going to say it nonetheless. We don't need any more government spending, right? I mean, the economy really is on a great recovery path. And I've said this for month after month on this show, that the stimulus is the vaccine. And John Hilsenrath, by the way, you're exactly right. I mean, the one thing that could really mess up this picture is if we had another variant that had to shut down the economy again, God forbid. But if that doesn't happen, I think we're looking at a really strong rest of the year. One other quick point, I make this point a lot, but just about a week ago, the state unemployment numbers came down. You've got about 15 states, most of them Republican red states, that actually already have a labor shortage. Their unemployment rates are less than 3.5% to 4%. The big high unemployment rates are in California, New York, New Jersey, Illinois, Hawaii, these blue states. They've got to get their economy wholly open, and then it's going to be sunny skies for the rest of the summer and into the fall.
Two things I want to add to your point there, Steve. First off, yesterday when we got the initial claims, Illinois and Ohio actually boosted those numbers that we got yesterday. That's the weekly data, not the monthly data. And then to your point about the variants, I do want to say we did have Dr. Adalja on in the last hour, and he is not as concerned about the variants because we are seeing, in particular, the Pfizer vaccine now protecting those that are vaccinated, which is 16% of America. I just want to throw that out because, you know, we can say that we're worried about it, but I'm trying to listen to the doctors that tell me that those variants are we shouldn't be too concerned yet. I do want to bring in, stand by, buddy. I want to go back to Edward Lawrence in Washington. And you've got some more data on women in the workforce, correct?
Yeah, your panel was talking about this. Women, an important measure here. The number of employed women actually rose 595,000. Now, compare that with the number of employed men actually dropped. Now, this is women over 16 and over. For men 16 and over, it actually dropped 144,000. So for women coming back into the workforce, the women unemployment rate was 5.9%. That's down from 6.1%. And the participation rate, the labor force participation among women, went to 56.1% from 55.8%. So more women, it seems, added to the workforce here in this jobs report.
Joni, you brought that up earlier, and a piece of that, and I know why you were watching it so closely, is because as schools reopen, we're hoping, and maybe we are seeing, more women go back to work.
Yes, Cheryl, you know, that is going to continue, hopefully, to move in the right direction as we do see schools reopen. You know, I have many colleagues that work in California. Their schools are not fully open, and they're still juggling the challenge of having their kids at home, online, young children. I mean, this is still a big challenge in many states across the country. So great to see it moving in the right direction, and I think we need to continue to watch that. I also want to make another point, Cheryl, just on kind of the pent-up demand that is out there, especially in supply chain. You know, I think if we could get, you know, some of the backlog that is there with manufacturing and logistics, I mean, looking at what's happening with motor vehicle parts, you know, we've had automobile manufacturers have had to shut down in the United States and lay their employees off because they don't have the parts. So there is so much pent-up demand in the workforce right now that once we really get kind of supply chain back on track, you know, I think we're going to continue to see a tremendous amount of job growth. So as long as we can, you know, keep the virus from coming back, I really do believe that the job market and the economy is going to be full force ahead.
And you know what, Eric, I'm going to bring you back in because we did get the Suez Canal opened this week. There is a lot of backlog. There are plenty of freighters that are sitting off the Port of Los Angeles right now that are waiting to dock. So we do have a little bit of a short-term disruption. But Eric, what do you make of her point about long-term supply chain coming back?
I think it's a very relevant comment. The Institute of Supply Management had a very robust report over the last couple of days, not just in the U.S., but also in Europe and Japan. Europe and Japan, a bit of a surprise, given some of the trends there, especially on vaccination. So the Suez Canal opening is a positive. It actually only represented about 0.5% of annual global trade. So it was a great short-term story. But I think to your point, the bigger issue is what we're seeing in the Port of Los Angeles. Really, the knock-on effect is what's happening with chips, and that chip shortage is affecting everything from automobiles to cell phones to computers, et cetera. So ultimately, we think that this release valve will materialize. And if you couple that release valve with increased demand, you get this glide path effect that we think could be quite positive. Again, we're not all rainbows and puppy dogs. There are some risks on the other side of this year, meaning how sustainable will that demand be? But again, that glide path met with demand would be, of course, a very positive development for the global economy and for markets.
I keep watching, I'm listening, but I'm watching the bottom of my screen right now. Look at the Dow right now. Dow futures, John Hilsenrath, now up 183. Again, markets are closed today, but the bond market does have a half day. What are your expectations?
Well, you know, bottom line, it's good news. The economy's coming back, and we're seeing that in the stock market. I don't see what's going on with bond yields. You have to expect that they're going to go up a little bit. I want to say one other thing about schools because
the 10-year. Can I jump in? I can answer it.
Yeah.
The 10-year just rose to a session high, 1.698%. Question answered.
Yeah.
Go ahead.
Right. So that we should expect that. That's still lower than where 10-year yields were a year ago. So I don't think it's a problem.